You are welcome to Remit Trade Academy. In today's video, I'm going to show you how to use the MACD the most effective way instead of using it the traditional way, and how to use it and have a high probability entry. So let's dive right into it. If you are new to this channel, please help subscribe to the channel, hit that like button, and don't forget to turn the bell notification for more updates like this every single day. Also check the channel for all the educational content. Leave a like and don't forget to share this video right here on the 1-day chart BTC USDT. If you want to add the MACD to this chart, you simply go to this very area technical indicator and then add the MACD to my chart. And right here is the MACD on my chart already. The MACD is a lagging indicator, so it lags behind the market. That means if you don't know how to trade it properly, you will be in the wrong direction of the market using the MACD. For example, the traditional way of trading the MACD is using the MACD line and the MACD signal line when there is a crossover. For example, at this very point, we see the MACD line and the signal line cross over each other at this area, which indicate that the market is going to come back down before the market will continue to the upside again. So if you enter a short position at this very area, market come down, but market still go to the upside, that means you would have been stopped out. And then at this point as well, market continue to the downside before it moved to the upside again. So if you are trading the MACD the traditional way by entering the market at different crossovers of the MACD line and the signal line, just like you're seeing right here, and at this very point and at this very area, this very area and this very area, you will find a lot of false signal, and that will never be healthy for you on the long run, and you will be making a lot of trade with multiple losses, and that is not good for you at all. So there is a more effective way of trading the MACD instead of trading the MACD the traditional way, and that is what I'm going to show you right now. So definitely stick around. There is what we call MACD divergences. So the market diverge and then begin to move to the upside. So it can be either bullish divergence or bearish divergence. Let's say, for example, on the chart right here, we see the market move to the upside from here up to this very point. And if you look at the MACD histogram right on the indicator at this point, you see the market was declining. So from this area right here to this very point on the MACD, the market declined. So this is a bearish divergence. Reason why the MACD is declining to the downside while price action on the chart is moving to the upside, and afterward market begin to come back to the downside. This is a potential market climbing back to the downside. That means it's telling you to take a short position, but you don't have to take the short position immediately. You have to wait for confirmations, and that is what I'm also going to reveal to you in today's video, so that you know when to actually enter into divergence. So for example, in this case, we have a bearish divergence because markets go to the downside immediately after this very pattern that appear on the chart and on the indicator. Then the next one right here, if you look at this very area, we see the market was coming back to the downside in this formation. And then if you look at the MACD from here, from this area to the downside, market was declining down, and from here to this very histogram, you see market is moving slightly to the upside on this very line to this very point before we see this very area begin to move to the upside. This is an example of a bullish divergence. So a bullish divergence appear on the chart. It is an indication that markets have capacity of moving to the upside very, very soon. And all you need to do is to check confirmations. Once those confirmations are reached, then you can actually take your trade. One thing baby traders do is once they see divergence on the chart, they begin to jump into buy and short opportunity. Most of those divergence can be a false or fake divergence, and market begin to drop back down against them. And that is what I'm going to show you right now. If you look at this very area on the ETH USDT chart, this is a 4-hour chart right here. We see the market come back to the downside, and then the histogram right here, and this very histogram, if you look at it, market slide a little bit to the upside. This is an indication that the market is going to move to the upside. But in this case, the market begin to move to the upside to this point, and then we see the market consolidate around this area, then a breakout. This is a typical example of a bullish divergence, and the market move to the upside. What you need to do in this case is you don't need to take the trade immediately after you see the market begin to move with this very candle. You have to wait for the market to move and either create a new high, have the previous high at this very area, and then retest the level before continuation, or the market should break certain patterns. For this very example right here, if you draw a trend line from this very point to the downside, you see the markets have to break this trend line. A breakout of this trend line is an indication that the market is going to move to the upside. So once we see the divergence, first of all, the market continue to move to the upside in that very direction, then break this very trend line. At the breakout of the trend line is where you have to enter your trade. This is one confirmation. So you can use this to enter your trade instead of entering the market after the formation of a divergence and market begin to move to the upside. Then the second one is market form a divergence and you have to wait for the market to create a new high, because when market creates a new high, it's a sign that the market is about moving to the upside. So market move all the way from here after the divergence and come into this area to this very level, did not really create a new high because this is the very high at this very area, then consolidate. A breakout of this very line of resistance indicate that the market is going to move to the upside. So market breaks out and creates a new high with this very candle, which is higher than every other high at this very point, and the market begin to move to the upside. This is a typical indication that this market will move to the upside after this very divergence, so that you don't need to take divergence immediately after you seal them or spot them out on your chart. And if you look at this very area right now, this very market is at this very point, that is 1.9k. There is a divergence on this chart, and at this very point, if you draw the line from here to this very point where the market is, and then if you draw same on the indicator from here at this very point to this very area, you see a typical divergence appearing on the chart right now. What you need to do is not just to take a short position. You have to confirm this divergence, either a breakout on trend line or a specific chart pattern. In this very example, if you look at from here to this very area, this market is moving to the upside, but I am expecting the market to come back down after spotting this very divergence. And if you look at this very pattern, this is a rising wedge in an uptrend. A rising wedge in an uptrend is a bearish reversal pattern. So this market is going to move right down. A confirmation is needed after this very divergence, and what I need to wait for is for the market to move from here up to this point and break out on this very line and begin to move to the downside. Once I see a breakout here, that is on this very line right at this very point, then I am going to take a short position for the market to continue back to the downside. This is a right way of trading divergence instead of just entering the position right now where the market is, because the market is going down on the indicator and it has made a new high on the price action, signaling that the market is going to go to the downside. And another example right here is on the BTC USD 4-hour chart right at this very point. If you look at this market from this area on the indicator and on the chart, the market is moving to the downside on the price action, creating new lows. But if you look at the MACD indicator, is starting a little bit to the upside, which is a bullish divergence. Two very important points of entry on the chart is either you make the market from this very area to the downside, so that once you see a breakout on this trend line, you can actually enter the market. And this is a falling wedge. A falling wedge in a downtrend, it is a bullish reversal pattern. So bullish reversal pattern, market breaks out and begin to move to the upside. Another point of entry is you wait for the market to create a new high. Let's say, for example, the market at this very point, this was a high, market dropped right down. So at the creation of a new high at this very point of this candle, you take a position at this very area and the market begin to move to the upside. This is another example of a bullish divergence. And if you take divergence like this, you are going to always be in profit. So another example is on this very chart, that is the 1-day chart BTC USD, like I showed you earlier. From this very point, markets begin to come back to the downside, and right here on the indicator, market is sliding downward. This is a bearish divergence on the higher time frame. This is the 1-day chart. What you need to do right here is not to take the trade immediately after you spot out the divergence. You have to wait for the market to break out of certain levels, or if you see certain patterns from this very area, you see the market from here up to this very point, we will have to wait for a breakout. So a breakout of this very line will indicate that the market is going to come back to the downside. So if you spot out the divergence and you wait for the market to break out of this very trend line, and then the close of this very candle is a nice place to enter your trade. So market come back right down and then move up a little bit and continue its movement to the downside. With this very strategy, you will be in the right direction of the market. And the last example right here is this bullish divergence formation that I showed you earlier. So from this very point to the downside, and then from here on the indicator to this very area, we also have a divergence at this very point. This is a bullish divergence, and the market begins to move to the upside from this very area. It is advisable for you not to take a trade immediately you spot out the divergence. A divergence simply means the market is going to move either upward in case of a bullish divergence or downward in case of a bearish divergence very, very soon. What you need to do is to wait for confirmation. So on this very trade, draw a trend line from here to the downside at this very area. You see the descending wedge or a falling wedge. A falling wedge in a downtrend is a bullish continuation pattern, and at this very point market breaks out, then after the breakout and then market continue in this direction. So it will be wise for you to wait for this breakout. At the close of this very candle is the right time to take a long position on this very pair, and then market begin to move to the upside. This is the right way to trade the MACD instead of trading the traditional way. I believe you will find this video helpful. Comment below in the comment section of this video, how do you use your divergence? And in my previous video on how to use the MACD, I'm going to show you 2 other trading strategies of how to spot out divergence that is very, very effective. If you are new to this very channel, please help subscribe to the channel, hit that like button, and don't forget to turn the bell notification for more updates like this every single day. Also check the channel for other educational content. Leave a like and don't forget to share this video if you want to learn how to trade crypto effectively. Check the description of this video, you see contacts, and reach out to me immediately and get trade. Thank you very much for watching today's video, and I will see you in the next video.